What if I told you millions of people are now financing their takeout? It sounds wild, but it's the reality of buy now, pay later services like Klarna and Afterpay. This industry is projected to handle transactions worth over $500 billion globally. The promise is intoxicating. Get what you want now and split the cost into 4 easy, interest-free payments. It feels like a financial cheat code. But what looks like a smart way to manage money is often a carefully designed trap that nudges you to overspend, lose sight of your finances, and slide into a debt cycle that is surprisingly hard to break. Today, we're exposing how this system works and how to stay out of it. Section 1. The seductive promise. The power of buy now, pay later, or BNPL, is its brilliant, nearly invisible design. You're at a checkout with a $200 item in your cart. You might pause. But then you see the option, or 4 interest-free payments of $50. Instantly, the mental math changes. It's not $200 anymore, it's just $50. This illusion separates the pleasure of getting something new from the pain of paying for it. It doesn't feel like a serious loan. BNPL is woven so seamlessly into shopping that it feels like just another payment button. The frictionless process is engineered to lower your guard, making borrowing feel casual, and that's exactly when you're most vulnerable. Section 2. How the trap springs shut. This is where the friendly app gives way to a harsher reality. First, the psychology. Splitting a purchase short-circuits the part of your brain that hits the brakes on spending. This encourages you to buy things you might not otherwise afford. This leads to the second part of the trap, the debt spiral. One small plan seems harmless, but it's almost never just one. A report from the Consumer Financial Protection Bureau, CFPB, found the average user takes out 9.5 BNPL loans a year. The system is designed for repeat use, a phenomenon called loan stacking. In fact, 63% of BNPL borrowers have had multiple loans at once. It becomes incredibly difficult to track your real debt. And that brings us to the hidden costs. Interest-free does not mean cost-free. The business model relies on people making mistakes. An alarming 41% of users made a late payment in the past year, a significant jump from the year before. Miss a payment and you're hit with late fees. Worse, if an automatic payment pulls from an empty debit account, you can be hit with an overdraft fee from your bank. Finally, while many providers don't report on-time payments to build your credit, they can report defaults that go to collections, damaging your score. Are you juggling more than one of these payment plans? If this is hitting close to home, hit that like button to help get this conversation in front of more people. And share your experience in the comments. Your story might be the reality check someone else needs. Section 3. The target on your back. While BNPL is used by everyone, data shows it's most popular with younger consumers. Recent data shows that nearly 2/3 of Gen Zers have used a BNPL service. These services are also heavily marketed to people with subprime credit scores, the very people who often can't get a traditional credit card. Perhaps the most alarming trend is using these loans for everyday essentials. A stunning 1 in 4 BNPL users have used them to buy groceries, up from 14% a year ago. For Gen Z users, it's 1/3. Let's be clear. When you are financing something that will be gone before you've finished paying for it, you are in a danger zone. It's a red flag for financial distress, sold as convenient and cool. Section 4. How to disarm the trap. The good news is, you can disarm this trap. It starts with a simple mindset shift. First, call BNPL what it is: a loan. Not splitting a payment. It is debt. Second, build a mandatory 24-hour cooling-off period into your buying habits. The impulse to buy often fades, letting your rational brain take over. Third, and most importantly, replace the fake fix of BNPL with a real one: budgeting and saving. Instead of financing a purchase, start a sinking fund, a separate savings account for a specific goal. If you can afford the automatic payments to a BNPL company, you can afford to pay yourself instead. You'll earn interest instead of risking fees. Finally, if you feel you must use a BNPL service, use only one provider to avoid confusion. Set calendar reminders for every payment, and never use it for consumable goods like food. The promise of buy now, pay later is a beautiful lie. It sells a fantasy where you can have it all right now and worry later. But later always arrives, often with late fees and damaged credit. Real financial freedom isn't found in an app. It's built slowly, through conscious decisions and the simple act of spending money you actually have. You have the power to see this system for what it is. Thanks for watching. If this video helped, subscribe for more.